Hello, welcome to my channel today. This is the King Store. The first time of joining us, ensure you like, comment, share, and subscribe to this channel. Now, today, I want to see a question on ratios. Now, the question said the following information relates to the books of accounts of Adam Limited. They have the trading and profit and loss account for the year ended 31st December 2014. We have the opening stock, purchases, closing stock, cost of goods sold, profit, selling and administration expenses, administrative expenses, net profit. And these are the items for the statement of comprehensive income, which is the trading profit and loss account. And this is the statement of financial position, which is the share capital, ordinary shares, preference shares, general reserve, profit and loss account. There's also fixed asset at cost, less depreciation, the current assets, and the current liability. And the question said, you are required to calculate any six of the following. A, gross profit percentage. B, net profit percentage. C, return on capital employed. Then D, current ratio. E, assets test ratio. F, rate of stock turnover, working capital, shareholders fund, and liquid assets. Now these are the questions they're asking us to find. But we're going to solve all of it. Okay? So let's start with the first one, which is the gross profit percentage. Now, the formula for gross profit percentage is giving us the gross profit over sales times 100 over 1. Okay? Now, from this the question, the gross profit here is 96,000. So it will be 96,000 divided by our sales here is 240,000 divided by 240,000 times 100 over 1. Okay? So if we use our calculator, now we'll have 96 divided by 240 times 100. So this will give us 40%. Okay? So the gross profit percentage for this question is 40%. That's the first question. Okay? So the second one said the net profit percentage. So net profit percentage, same thing as our net profit over sales times 100 over 1. So we're going to check here. Because the net profit is 8,000. That's 8,000 over our sales is still 240,000 times 100 over 1. So we now have 8,000 divided by 240 times 100 over 1. That is 3.33%. Okay? 3.33%. So that's the second one. The third one is return on capital employed. Okay? That is our C, which is return on capital employed. And return on capital employed has a formula of earnings before interest and taxes over the capital employed. Okay? And the capital employed also has its formula. The capital employed also has its formula. It is giving us the total assets minus the current liabilities. The total asset minus current liabilities. So we're going to check here our total assets and the current liability. Now from here, if we check here, our total asset is 182,000, while the current liability, trade creditors and this is 40,000. Okay, so it will now be 182,000 minus 40,000, and this will give us 142,000. Okay, 142,000. So our return on capital employed now will now be earnings before interest and tax should be our net profit, which is 8,000. That's 8,000 over 142,000. Okay, so if we do that, 8,000 divided by 142,000 give us 0.0563. Okay, so if we multiply it by 100, it will now give us 5.63%. So our capital return on capital employed is 5.63%. Okay, so that is the third one. Now the next one, which is D, is the current ratio. The current ratio. So now our current ratio is giving us a current assets divided by a current liabilities. The current assets divided by current liabilities. Now from this question, we're going to check our current assets. Is the current asset. So the current asset here is 82,000, or the current liability is 40,000. So it will not be current asset is 82,000 divided by current liability is 40,000. So if we have 82,000 divided by 40,000, that is, we have 2.05 is to 1. So that is our current ratio. Okay. Now the next one is acid test ratio. The acid test ratio is also known as what we call the quick ratio. So if we have E, acid test ratio, it will be the current assets minus stock over the current liabilities. Current asset minus stock over current liabilities. Now the current asset from this is, if you check here, 82,000, while the stock is 36,000. Okay, and current liability is what, 40,000. So it is now current asset is 82,000 minus our stock is 36,000, all divided by current liability is 40,000. Okay, so if we have 82,000 minus 36,000 will give us 46,000 divided by 40,000. Okay, so we have 1.15 is to 1. So our answer is 1.15 is to 1 as the acid test ratio. Okay, and that's the first one. The next one, it said the rate of stock turnover. The rate of stock turnover. So the rate of stock turnover will be given as F. The rate of stock turnover, okay, is given as the cost of goods sold over average stock. That's the formula. The cost of goods sold over average stock. Okay, but the average stock is given as the opening stock plus the closing stock, all divided by 2. Okay, so we are going to get the average stock first. Okay, so we say the average stock is equal to, let's get the average stock first. Now from our question here, the opening stock is 20,000 while the closing stock is 36,000. So we'll have 20,000 plus 36,000 divided by 2. So 20,000 plus 36,000 will give us 56,000 divided by 2. Okay, so 56,000 divided by 2 will give us 28,000. Okay, 28,000. Now therefore our rate of stock turnover is now equal to cost of goods sold. Now, what's our cost of goods sold? Look at it here as 144,000. So it is now 144,000 divided by average stock is 28,000. Okay, so if we do that, 144,000 divided by 28 will give us 5.14 times, because the rate of stock turnover is talking about how many times. Okay, so it's 5.40 times, approximately 5 times. So that is the rate of stock turnover. So the next one is the working capital. The working capital. The formula for working capital, which is G. A working capital. Working capital is giving us the current assets minus the current liabilities. Current assets minus current liabilities. Now from this question, these are current assets, 82,000, and current liability is what, 40. So we have 82,000 minus 40,000. So 82,000 minus 40,000 will give us 42,000 Ghana cedis as a working capital. Okay, so next one, shareholders fund. Shareholders fund. So we have H, the shareholders fund. Now, the shareholders fund is what accrues to the shareholders, and the shareholders fund has a formula of the total assets minus the total liabilities. The total asset minus total liability. Okay, so we're going to check here what is the total asset. Total asset is both fixed and current, which is 182, while the total liability is both the long term and the current, but there's no long term liability in this question, just the current, which is 40,000. So it will now be 182,000 minus 40,000, which will give us 142,000 as the shareholders fund. Okay, which is the same thing as this, adding all the capital and the retained earnings. Okay, so that is the shareholders fund. Why the last part will be the liquid assets. Okay, now what are liquid assets? Liquid assets are those assets that can be easily converted to cash. It can be easily converted to what? To cash. And they are more or less items, what we call the current asset. Okay, now the liquid assets. So say I, a liquid assets in this question now will be in order of, will be stock. Stock is 36,000. I have debtors 39,000. Then cash and bank is 7,000. So if we add everything together, it's giving us 82,000. So these are liquid assets that can easily be converted to what? To cash. Okay, so that's the current asset. So that's 82,000. Okay, so that's how to solve a question relating to this. Thank you for watching. Ensure you like, comment, share, and subscribe. Please comment where you're watching me from so that I get to know you and drop the questions you want to ask. Okay? Thank you very much.